Yeah. We can hear you. We can hear you.
Great.
Yeah, you're audible. We can hear you, Mr. Moon. I think I mute you again. Can you unmute again?
Are you able to hear me?
Yes.
Okay, great. So I wanted to say another addition to risk management involves a lot of things. Number one, it would be risk in terms of your capital, your money, your investment, and how much risk per trade you want to take, the trade position, how much risk you want to take. Then it comes also your time. You how much time do you want to risk on the trading sessions, because that comes in your trading plan. So risk involves a lot of component as a trader that would how to manage risk in all angles when it comes to trading.
Yeah. All right. That is correct as well. That is also correct, sir. I think that is why the session, there's a lot of things in a session, because of when it comes to risk, it's not just one thing that you should look on the market, right? It's actually different type of stuff, that all of those stuff, they need to go together, they need to combine, and they need to to work together in order you to actually get to the level of minimizing your risk. So pretty much when they say what is the risk management in the world of finance, the risk management refers to the practice of identifying potential risk in advance, analyzing them, and taking precautionary steps to reduce the curb or the rise of detail in economic time, or in a economic trading time, or in a time frame of the market, right? So that's basically what we call risk management when we talk about in finance. But if you look on it, there's a word analyzing. It actually means when you are analyzing your trade, right, you will analyze based on the risk management again that you have. So you're not going to just analyzing the trade just because of you analyzing your entry point and your closing point, but you are analyzing also based on the actually risk that you're going to take. Again, there's a key point here: identify a potential risk in advance, right? Identifying the potential risk in advance. How would it be nice if you are actually trading in a Forex market and you actually know that, if I do 1, 2, 3, it will actually expose my account and I'm going to lose a lot of money, or if I do 1, 2, 3, I will minimize in terms of loss, and I will have, a better chance for me to actually trade with my trading, right? To continue with the trading. So all of these involved with the analyzing, involved with the lot size, involved with a time frame, involved with the session that you are trading. Those are all part of the risk management when we are, talking about risk. So before wasting time, we're gonna jump into what we're gonna talk about. So first of all, I'm gonna start with the sessions. These are very, very important, topic when it comes about, trading sessions. It's very important. A lot of people, they don't really, care about it, but it actually very, very, important. Do you know what trading session is?
Yeah, I have an idea.
Okay, go ahead.
So, for example, the New York session, there's the Asian session, there's the London session.
Okay, all right, good.
The New York and London session are more intertwined to each other, because one starts at the other time and the other one ends while the other one is started within it.
All right.
So whatever you trade from between the USD or the London session,
yeah,
both sessions are volatile at the time.
Yeah, all right. Okay. No, you're quite correct. Anyone else that has a different, idea or different opinion about the trading session? Anyone else that has a different explanation about the session? Yes, Mr. Amon.
Okay, it's just I would say it's just an addition to what he has answered. Am I audible? Are you able to hear me?
Yeah, yes.
Oh, good, yeah. So their session, yeah, they are quite all right. There are three, as he mentioned. But again, what is important in a session is we need to understand when each session starts and when it's about to end, which next session is about to open up, so that we can position ourselves in trading. So for Asian, again, he explained a lot about the London and New York. I'll talk about the Asian session, which has got two in it. We have got what we call the Sydney session in Asian and Tokyo session in it because of the timing. So when you look at it, the Sydney time starts 23 hours Central African time, South African time, and then it ends at 08. Then the Tokyo session before the Sydney session ends at 08. 02, the Tokyo session will start and which will end at 11. Then now it will combine the London session, which will start at 09 hours and ends at 18. And then the New York, which starts at 14, the volatility time when people are awake, the BCD, and ends at 23. So that's a cycle that we need also to understand when it comes to the trading session.
Perfect. So the most important part when it comes to the session is to understand again, like the way Mr. Amon says about the whole cycle of the trading session. Remember, we are in the world that they say it's like a round, right? It means if the world is like a ball or an egg shape or oval shape, it means when it moves to other side, the other side they're in dark, the other side they are, they're at night. When it turns back again and moves to other side, the other region of the world is on dark. Now, the key point is that Forex market, it's a 24 hours market. It's the market that everyone can be able to trade each and every single day, right? That is why they're being installed these trading sessions. The trading session, they are there to actually to help you and me where we are in the world to identify what we can trade, what time should we trade, what we should actually, trade. That's the reason why this session is also added on a topic of risk management. Because of if you understand what you should trade and what time you should trade, it actually means you are going to get the volatility of the market on that particular period of that particular instrument. But if you don't know what you should trade, when you should trade it, what time you should trade it, you might trade wrong, right instrument at a very wrong time. The time that there's no volatility or the time that the market is closed, the time. So in that case, it actually demotivates you because you only have the trades running without doing anything. The trade is not making money. The trade is not going on a bigger loss, but it's been playing around at the same position over and over again because of maybe we enter the trade at we enter the instrument on the end of after the session is end. We enter a Sydney instrument at maybe a New York session, or we enter a Japanese session at a European session, right? So pretty much there's actually 4 sessions. There's actually 5, but the 5th one is not much popular at that particular moment in the financial market. So 4 sessions that the most powerful one. Started with the Sydney session. The following one, it's a Japanese session. The 3rd one, it's a London session. The last one, it's a New York session, right? The Sydney session, it's very close to the to Japanese session. The European session is very close to the United States session or the New York session. So sometimes when you are in a London session, you can be able to trade instrument that belongs to states. You can be able to trade the USDs because they are actually very close. So the volatility of this instrument, it roll over from London session to New York session. That's what basically, you know, the session does. Okay. So just a little bit of briefly on this. A trading session is a period of time that matches the perimeter of a daytime trading hours for a given local time. This phrase will refer to a different hours depending on the market and the location being discussed. So depending on the market and the location that you and me, we want to trade at that particular time. Generally, a single day of the business in the local financial market, from the market's opening bell to the closing market closing bell. The markets for Forex futures, stocks, and bonds, and all have different characteristics that define their respective trading session for a given trade. All right, are we together there? Any questions so far? So good.
All right, yeah, we're good.
Yes, we're great. You can just unlock the slides. We are able to see small pic.
Oh, all right. Let me do that so that you can be able to see it properly. Can you see it proper? Oh, still not.
It has opened two windows again.
Open two windows again.
Yep.
Just go to your bottom right.
The last one. Yeah,
This
the
one.
last one. Yes.
You good?
No.
It is two windows again.
No, the last one. Yes, that one.
Nope.
No, it's the case. I still on the second one, the last one. Yes, that one. Okay, let's see now how it will be.
Is it big?
Click that. Click now.
This one?
We are waiting to. No, the last one.
How about this one?
Much better.
Much better.
This one.
Okay, cool stuff. Thank you very much, Mr. Amunde. All right.
Okay.
So if there will be no questions, these are the sessions. If you can look at in terms of time as well, is there indicating from Sydney session, it overlap with the Tokyo session, London session, it overlap with the New York session, right? It means actually the trading time started in the midnight when the Sydney session starts, goes all the way, you know, to AM, close to the AM, but before it actually finished, already the Tokyo session, the intersect already started to the end. So the Tokyo session, I think it's ending around 6 o'clock, 7 o'clock in the morning, and 9 o'clock, that's where the London session actually, you know, starting. So remember, there's a little bit of tricky here. When the Tokyo session closes at 7 o'clock or 6 o'clock, there's 2 more hours before it gets to the London session. So the Tokyo session and the London session, it doesn't overlap, right? Because there's a little bit of a space that actually, you know, want you to, you know, by that time, the market doesn't have that much volatility. We can say maybe people from Europe, they're up and running, they you know, they are preparing to open their businesses, banks are preparing to open, right? But 9 o'clock, that's where the marketing bell, you know, I mean, the open session bell starts all the way, it goes to 2 o'clock. That's the London session close. But before the London session close at 2 o'clock, 12 o'clock, it's actually 6 o'clock in the United States. So by 1 o'clock already, it's 7 o'clock. People, they're already up and running. They already, you know, banks are already open. They already start again, you know, to exchanging goods and services and do the trades to, you know, for bringing a lot of money in a economy. So by 1 o'clock already, the market is already open. Again, New York session and Sydney session, it's not intersect, right? Because at the end of New York session, there will be a little bit of around 9 o'clock, 10 o'clock, there will be a time, maybe 2 to 3 hours before it gets to the Sydney session. So just know that there's only 2 intersect between Sydney and Tokyo. then there's a little bit of a gap, then London and New York, then there's a little bit of gap. Now, to add on that, what instruments would you need to be traded on a Sydney session, if I may ask?
Can you repeat that?
What instrument do you need to trade on a Sydney session?
The Swiss.
Okay, Swiss. What else? Anything else?
And also, can I try?
Yeah.
You can also trade on the Australian dollar, Canadian dollar.
Yes, correct. So there are a couple of instruments that you need to focus in when you are on Sydney session. But remember, we are talking about this instrument as a base currency, right? Because you cannot just trade CHF. You need to trade CHF with something, maybe with a dollar or with whatever, with New Zealand dollar, right? So you need to make sure the base currency, it's actually the one that is on a period of the session. So there's a Swiss franc, Canadian dollar, New Zealand dollar, Australian dollar. These are the instruments that actually have much more volatility during the Sydney session, right? And the Tokyo session, what instrument do you think we can trade? Anyone?
Japanese.
Okay, Japanese yen, it's much more obvious. What else? All right, okay. So you can trade a Japanese yen, of course, on a Sydney session. It's one of the instrument in Asia on a Tokyo session. But again, there's indices that you can be able to trade. I know a lot of people, you all run to NASDAQ, to trade NASDAQ, and you want to trade NASDAQ, you want to trade US 30, you want to trade France 40. But in the Tokyo session, there's actually a couple of indices that you can look at it and try to actually trade. And they are actually very, very volatile. If you check it out, you won't regret it. Trust me. Very, very, very volatile. So you can trade Indian 50. It's on a Tokyo session. You can trade Japanese 225. That's the stock. It's on a Tokyo session. You can trade Hong Kong 50. It's on a Tokyo session again. So I'm gonna write it on the chart. If you wanna check it out, it's IND 50. That's number one. Then JP 225. Then Hong Kong 50 again. All of these instrument indices we do have, they are very affordable to actually to trade with it. Okay. All right. Any questions so far? So far, so good, right? All right. So just the explanation, the Sydney and the Tokyo session equity market represent the overlap and the Asian session Forex time. The London stock market and the New York stock exchange hours overlap as well, the main trading session. We have had some confusion terminology, from traders like London session Forex time, and they say, oh, the New York session Forex time. The main trading overlap both of these. It's a Sydney and Tokyo and London and New York session. Okay, if we're good, we can move on to the next one. All right, ladies and gentlemen, the meeting is gonna cut in 5 minutes. Please rejoin again so that we can finish the presentation, okay? All right. So these are just the drawings showing you, yeah?
I'm just saying, okay, we'll join back after
Yeah.
5 minutes. Yeah.
Okay, no problem. These are just a chart, actually, showing those Australian dollar, New Zealand dollar, Japanese yen, showing that it actually overlapped from Asian to, from Sydney to Asia. And again, this one is the main trading session of all 8 currencies can be traded. So between Europe session and the New York session, these are a biggest one, in terms of trading, because there's all 8 major currency pairs that are actually trading at that particular time. So trading this time, there's much more volatility. But remember, if you take instrument from Asia and Tokyo and trying to trade it this side, for example, if you trade Australian dollar versus New Zealand dollar, right now, you're not going to see a lot of movement. There's no much volatility at that particular time. But if you are trading, let's say, Euro Australian dollar or New Zealand dollar versus United States dollar, you might see a little bit of more volatility because of the dollar itself. It's on a major session where it actually, on a major 08 currency, and it's on a major session as well as a New York session.
Yusuf.
Yeah, yes.
Yeah, I see what you mean. Because now I've had trades running from around 2. I've made some profits, and then the market started slowing down recently for the Euro GBP.
Euro GBP.
Yeah.
All right, so you had proper clock.
It's from around 2 actually.
Oh, I think it's because of maybe the Euro already, the London session, it's already gone. So you are actually
you've gone around 3, so that's why.
From one session, you are trading Great British pounds, which is both belongs in a Euro session, and you are trading European currency, which is also belong to European session. So 2 similar trades in a one session, that is, from one session trading it in a different session. If you are trading Euro USD, could be a different story. Or if you are trading GBP, USD or GBP Canadian dollar, could be something different.
True that.
All right. So now we know the reason why to understand the session, it's most important, right? We need to trade based on the session to capitalize, so that you shouldn't hold the trade the whole day, but you're still making $1, $2. You didn't make anything. Remember, a risk management, it's all about risking a little bit of your account, but be able to make money, not gambling. So we are not here, to talk about gambling. Someone who's he doesn't have a lot of money, but open with a bigger lot size, so that he can make so much money at that particular time. Yes, you will do that, but that's like you are gambling in the market now. You're no longer trading. You're no longer, building your account to grow bit by bit. Okay. All right. So currencies that can move in the main Forex session, I think this one also we passed through. United States dollar, Canadian dollar, Euro, GBP, Swiss franc, Japanese yen, Australian dollar, and New Zealand dollar. So all these, they can move in the biggest main session, which is European and New York session, regardless if they are moving with the instrument that belong to that particular session. So if you are trading Canadian dollar versus GBP in the morning, 9 o'clock, 10 o'clock, 11, 12, you see the movement. EuroCAD, early hours, you see the movement. If you trade Japanese yen versus, United States dollar around this time, you see the movement, in the market. So pretty much this is what actually mean. So the best time to actually trade Forex in the Asian session, trading in the Asian trading session is not advised at all for new Forex traders. For the most part, the volatility is too low for any good sustainable trades. Remember, a sustainable entry is defined as a movement that is 75 to 100 pips or more. So if you are a bigger trader that you are targeting from 75 pips to 100 pips per trade, I think European session and New York session, it's actually better for us to be able, to capitalize or to be able to get those pips when we trade. All right, guys, it's gonna cut any minute from now, so please rejoin again. Any questions so far?
Yeah, I will ask the question